Good morning. Happy Monday. Today's Monday, June 17th. Hope everyone had a wonderful Father's Day weekend. Um, Happy Father's Day to all the dads out there. We love you. Love you, Dad, if you're watching this week. This is my first year being a dad on Father's Day, so that was fun. Got to watch the U.S. Open yesterday, hang out. Victoria made a very delicious dinner, which I requested, and she nailed it. So all in all, good weekend. It was exceedingly hot down here, but it is June in Charleston, so what are you gonna do? Um, I'm kind of excited for this week's video because I feel like about once a month I get to record the weekly video, and especially with interest rates being interest rates the last basically since 2022, it's been kind of the hot topic thing we've been discussing a lot. Um, what the data says and what comes out of Fed Chair Powell's mouth, and what we see from like CPI numbers and different indices that track the economy. I feel like there's always like a piece or two that just doesn't line up. And this week it actually kind of all checks out. So I'm sure Johan will have a mess to deal with next week, but I don't need to worry about that. So it's kind of a fun one to walk through. So CPI numbers for May came out last Wednesday, and the Fed meeting was also on Wednesday. So that Fed meeting was like pretty universally thought to be somewhat inconsequential because there were no expectations that they'd lower the overnight rate. There is something to talk about from that meeting, but CPI numbers first. From month over month, the CPI numbers were flat, so 0% change, which is a positive. Year over year rose 3.3%, which the year over year from last month, that's actually down 10 basis points. So inflation moving in the right direction, which is a win. The primary takeaway from the Fed meeting was they adjusted the dot plot, which is their kind of projection of what future interest rate hikes and decreases are going to look like. Cuts, probably the better word to use. So in 2024, they bumped a rate cut out of 2024 and into 2025. So they're only expecting one rate cut in 2024, and now projecting that in 2025 there's going to be 100 basis points or a percent of rate cuts versus the 75 basis points they originally were projecting. So they just bumped one down the road further. So they're going to keep rates higher for longer is kind of the takeaway from that, which with the goal of kind of squashing inflation and getting the economy to slow down, it all makes sense. The market liked the CPI numbers and what came from that. So S&P hit a new all-time high, and the yield curve was pushed down to recent lows. So positives there. One additional thing, again, with the data continuing to make sense, University of Michigan released preliminary data on their current economic conditions index, which dropped pretty significantly. It was almost 10 full points, which this kind of drop is like a pretty strong indicator of slowing economic growth. So again, like this all cohesively works together, and Fed Chair Powell didn't say anything ominous or suspicious at the end of the meeting, which is a nice change of pace. This week we have Tuesday, so this is what Johan's going to deal with next week, which I'm sure will be a mess. Take that, Johan. Tuesday we have May retail sales. Those numbers are going to be released on Tuesday, and then Thursday new housing starts, and Friday comes existing home sales. So questions, comments, concerns, do not hesitate to reach out. Hope everyone had a nice Father's Day weekend, and have a great week. Thanks.